Industry leaders are warning that factories across the country could be forced to stop production if prices continue to increase. Well, joining me now is Andrew Sachs, Head of Research and Analysis at ETX Capital.
Hello.
Good evening, Andrew. Thank you for joining us.
Hello. Thank you very much.
The Prime Minister's plans are very ambitious. Are they achievable, do you think?
They certainly are ambitious, and I think it's quite an interesting dynamic. If you look at some of the actual, he mentioned electric vehicles, and that 2030 landmark has been actually a landmark that's been set by some of the manufacturers independently rather than just the actual government. So I think we will see by 2030 certainly the majority of vehicles. I don't think all of them will be electric, but I certainly think that the majority of the mainstream ones will be by that time. However, actually turning to powering an entire country, especially one as heavily industrialized and diverse as the United Kingdom, is quite ambitious by 2035 if you're going to talk about renewable energies and only relying on renewable energies. I think it's quite a good thing if it is achievable, but it's not. I think there are other factors involved, such as we're now going through a circumstance where we've seen there's been a gas price increase, and you have energy companies, traditional energy companies, 9 of them have gone into receivership in the last month in the UK alone. So there are some concerns on the other end of the argument for renewable energy, that this perhaps sudden draconian way of causing market volatility and making a situation where either retail customers end up having to pay a huge amount more for their energy at the moment, or companies that are large enough would be able to absorb that extra cost and make less profit. But of course, only large companies will be able to do that. So as we've seen, 9 companies out of the number of privately held companies that operate in the retail energy sector in the UK have left the industry, have left the country completely, left the market. So that has led to some concerns that it might perhaps end up some kind of oligarchy.
I mean, it's been interesting this last couple of weeks when we've seen people queuing for fuel. If they were all queuing for electricity, we've got a lot of infrastructure to put in place, and we're going to need an awful lot of electricity.
That's for sure. And yes, we have seen the lines of cars. Now, that has reduced somewhat over the last week or so. But let's be realistic here. There is no shortage of the raw material or of the refined petroleum product that you actually would put in your car. There isn't a shortage. If you ask anybody who works for Gazprom or any of the major oil-producing companies in the Middle East or in Russia, they will tell you that there is no shortage. This is a very unusual circumstance, and Goldman Sachs actually back in 2010 predicted that there was some volatility in the oil markets at the time. They predicted that there would be a $200 oil barrel. Never happened. Now, earlier this year, same company, Goldman Sachs, predicted that oil would go up to $70 a barrel. And that seemed outlandish back in April, May, but there we are. It has done so. And now, just a couple of weeks ago, there was an interview on Bloomberg, and it was a few analysts who were actually anonymous at the time, had said that we will perhaps be looking at the $200 oil barrel by the end of the year. Now, given the finite, it's not a finite resource. That's the thing. Oil is not a finite resource, but it's being treated as one in the eye of the public. So there's a lot of panic buying. And therefore, by pure supply and demand at the fuel pump, it's possible that the prices may increase quite dramatically, as have domestic energy bills for fossil fuel-powered energy systems for heating homes.
So moving on to sort of domestic supply, this is going to be the thing that's in people's minds as they approach Christmas. What can they do in the current situation with facing massive increases in domestic heating bills?
Well, that's the thing. I think this is an unusual circumstance, because in the past, whenever there's been a increase in energy prices in the traditional sense, there have been options, there have been alternatives, there have been different competitive companies to go to. But now the difficulty we have is that there are lots of factors, there are lots of people in positions of authority blaming each other. Some of them are government, some of them are politicians, global politicians, some of them are civil service public sector workers. For example, the DVLA in Swansea has a massive backlog issuing HGV licenses. Now, that is being considered to be something which is holding up food supplies and so forth, but it's actually also impinges on fuel, because the fuel tankers have to get the refined petroleum product to the fuel station somehow. And there's a massive backlog. And just today in the news, it was made clear that DVLA isn't going to increase capacity of workers to clear the backlog. So that is one aspect. The other aspect is several energy companies going out of exiting the market, leaving this to a few companies which at the moment might not necessarily pass all of the increased cost on to clients, but that means that their own profit will be eaten by them having to absorb the extra cost, which is not sustainable in a very low margin business. And oil itself is an unusual product in its own right, because it's a commodity, but it's rare in the respect that it's a consumable commodity. Things like gold and so forth are not. They're stores of value as far as assets are concerned, but oil is a consumable commodity for which there is an immediate demand by consumers. So it's very unusual when something like this happens. That is a commodity which rockets in price usually. So this is what we're seeing now, and there isn't really a lot that can be done from a consumer point of view, because it's still something which is very much dependent on. We are going through this revolution in terms of renewable energy and electric vehicles, but that's still it's only a recent thing. Last month 33% of all new cars registered were electric. But that's only just happening now. There are still, the average age of a car on British roads is 10 years. None of those, all of those rely on using fossil fuels.
It's a bit of a mess, really, Andrew, isn't it? And as usual, the consumer is the one who's going to foot the bill to put the situation right. Thank you very much. Let's hope there's an improvement.